Here's how you can achieve 100% occupancy during slow seasons with using the midterm rental insurance strategy, but there is a caveat to that. And in this video, I want to show you how you can do this in your marketplace, leverage the midterm rental insurance strategy to make up for your slow season. So my rule of thumb always goes back to the asset type, right? And in multiple videos here, how does this midterm rental insurance strategy work? Who is it for? Who is it not? Who benefits the most from it? How can I maximize on taking advantage of this opportunity in my marketplace with what type of asset, etc. I'm going to cover that in a second. So with that said, this is a perfect strategy to use for those who do need this during a slow season, but are gravy during their hot season. Don't use this if you haven't done the math. Now here is the math. Let's start with the simple math for the interest of the conversation. We like to run this midterm rental insurance strategy on single family homes. Now, you might say, we're gonna have a condo, we're gonna have an apartment, can this work? Yeah, well, I'll tell you what this works best on is homes, or from our experience, what has this worked this best on our homes because it can solve a larger problem. And there's probably less homes available in your marketplace because there's three sectors that are being looked at in the temporary housing space and the relocation space. And those three verticals are, first, there's the hotel vertical, then there is the apartment vertical, and then there's the single family vertical, right? The single family vertical is the one that we operate in and the one I can speak on the most. The apartment one, yes, it so happens people get relocated there with respect to the market value and respect to the type of asset. The reason we like the single family, if you're watching this, you have a single family, is because we know that we can get charged for more heads with more beds, and we can also accommodate pets and at the same time give them a similar product that they have in a larger home. For us, that's a 4 or 5 bedroom home. And the way we do the math on that is typically a policy, a loss of use policy, which is another word for if something were to happen to your home and you're able to actually be displaced, not to include the cost of the claim to fix your home if something happened, but the cost to displace you. How much would that cost be that the insurance company can cover? And typically it's anywhere from 20 to 30% of the property's dwelling value. If you're currently getting value from watching this video, you'll want to make sure you take a second and click below to grab the midterm rental insurance blueprint to help accelerate your process in being able to land these midterm rental insurance contracts with respect to your marketplace. Make sure you click the button below and grab it and continue on with the gems in this video. All right, dwelling value is the dwelling itself. The coverage, also known as coverage A, which is what the property is actually worth, not the land value. Sometimes people get that confused, especially in the vacation rental marketplace. It's important for you to know what your dwelling value is versus your land value, and you can do that by looking at your home insurance policy. But for the interest of doing that math, you can also go on Zillow and figure out what the property value is, and based on that, do anywhere from 20 to 30%. I like to do 25% because it's right in the sweet spot. And say your home is worth $400,000, 25% of that is $100,000. So now what does that mean? $100,000 means that is the loss of use that this family has, also known as coverage D, which is what is the number that's the pool of money that the insurance company can use to relocate their client, right? Client is the person that is the policyholder that is filing a claim because they're unable to live somewhere. Now, if you're in an area where you experience slow seasons, it means you need to understand that if your slow season is, 6 months long or maybe 4, you should then be able to take that 25% of that dwelling value and divide it by those months. It would not be unreasonable for you to be able to list the property for, let's say if it's 6 months, 100,000 divided by 6, that's $16,000 per month. That means that from the loss of use, it says $100,000 of essentially loss of use income. You take that number of unavailable months or months where you're basically not booked and busy, and you divide it by that. That gives you an amount. In this case, it's 16,000, which means it would not be unreasonable for you to be able to land an insurance contract for that much. Now, what do you need to do first? I have multiple videos on this channel about how to optimize and how to get in front of these deals, but you would want to at least list in the databases, list on Zillow, list anywhere they exist for them to be able to find you so that you could actually make up that amount of money during your slow season if you're properly optimized to receive them. Now, literally, I have an entire video. As a matter of fact, you can watch the latest one of how to get in front of your relocation specialist. It'll be somewhere up there or towards the end to then understand where you should live. But that is how you can actually make up, you can capitalize on your busy season and at the same time be able to capitalize on your slow season with a separate strategy. Now, what I do believe this will work best in is for those who are in markets where it's still year-round markets. It's still slow. So I'll say this, it's not just 100% vacation and like people shut down the town during your slow season, because who's gonna live there? Who's gonna have temporary housing there if literally the town shuts down? Right? That's not ideal. What I'm saying is when there's a slow season, there's less tourists and all that, you can capitalize on someone who's being relocated in your zip code because there's people who actually live there, and capitalize on giving yourself the chance. This is all about giving yourself a chance. Most people don't even give themselves a chance to succeed, or at least people that capitalize on these lucrative contracts that are so prevalent. They're more prevalent than you even think. Give yourself the chance by being able to have your property in the right place, in the right databases, so that you can actually make up for the occupancy and be highly profitable during your slow season. It's doable, but keep in mind that location matters. If you're in a town that's completely shuts down, like I'm talking about, there's zero people, like the economy is like down during that period, like things actually shut down, it would not be the type of strategy, or at least you're not going to have as much success as if you're in a town that just simply actually gets a dip by nature, but you still have the grocery stores open. You still have people who actually work there. You still have local townies, call them, to actually live there. That means that if something happens to someone's property in that neighborhood, in that zip code, in that city, then your property becomes available to them. And now you can very well capitalize on not only being booked and busy in the hot season, baby, but also being able to capitalize in the slow season. And that is how you can stay on top and make the most profit, the most revenue, by understanding the hybrid strategy. This is a perfect strategy that can be used for those who experience slow season with the caveats that I mentioned before. On that note, if you got some value by watching this video, make sure you click the how to get in front of relocation specialists in your market to be able to capitalize on this double strategy. See you next time.